Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike BR. Today is Tuesday, January 7th. Hope you guys are having a great morning so far today. Good to be back in the regular schedule here. My apologies for yesterday. I got that wrapped up right about half hour before close. Markets did close a little bit to the negative side. I think when I did that report, we were up about two or three basis points, and we ended up closing down 2 basis points. So still no change to the market to the interest rates, but just to give you a gauge as to what kind of transpired, and what's went up. Yields will close up at about 1.81. So let's take a look here at what's going on today so far. Economic calendar, we got the ISM non-manufacturing index, which is basically the services industry. This is considered more the gold standard than what we saw yesterday from the market PMI, but still kind of indicating the same thing where we had anything in 50 or above is considered optimism or expansion. So we had 53.9 back in November. Forecast gone for increase to 54.5 and actually went up to 55. So we saw a nice uptick in the ISM's non-manufacturing. Yesterday we saw a slight one. It was like 52.2 to 52.8, I think it was. But this one went up much more, and which is good news for our economy here. Service industry actually makes up the vast majority of jobs here. So if we see an uptick in that, that means jobs are doing much better. However, factors, as we can see here, for the month of November, October was up 0.2%. However, it was calling for a 0.8% decline, and it dropped 0.7% instead. So pretty close to forecast, but obviously it's a decline. So we'll have to wait and see what December looks like. I believe December we had some decent manufacturing, so it'll be interesting to see what we see for the next run of these numbers for factory orders. So let's take a look here at the headline news. Stocks are down right now. It was struggling this morning when it first came open. There was indexes. It was kind of more mixed. We were kind of in positive territory. They were trying to fight the because late in the day yesterday, the stock market went from negative to closing in positive territory, kind of shrugging off the tensions in the Middle East. Today, however, those tensions are kind of creating a little bit more havoc today. They're kind of coming to those tensions. And what's going on basically right now is U.S. looks like they might be bringing more military to the Middle East. We got Iran vowing to revenge, and several different ways they're going to revenge. We of course are saying there's different ways we will retaliate. Iraq, who's in the middle, are basically trying to get the U.S. troops out of their country. So we're kind of in a pretty big conundrum here, and it'll be interesting to see what transpires. Hopefully this doesn't translate to much more. I don't think it's going to reach the levels that they claim. A lot of people are worried about World War III. I don't think it'll be at that. Yes, they'll tension up. Neither country wants a full-scale war. But in any case, let's see how this is playing out in the bond market. Bond market's down a little bit today. We're down about 3 basis points. So as you can see here, we're way up here. We had 2 basis points down here. We're down another 3 basis points, but it's still not enough to change any pricing. So pricing should remain unchanged from what we saw the last 2 days, from Friday's close to even yesterday. We didn't have enough change in the total pricing to have any difference there. So again, pricing should remain unchanged for mortgage rates. Yields, oops, sorry about that. And mortgage yields, here we are. We're about pretty close, about the same range here, about 1.18182 range, and just seeing below its 50-day moving average, and just above this Fibonacci level, which has been a pretty important Fibonacci. As you can see here, we touched it yesterday when it actually started the day below it. It was at 1.779, or round up to 1.8 range here, and that's been a pretty important one. It's been a pretty good floor of support for it, so it's range here, and right now it's up a little bit from there. All right, so that's pretty much a wrap for the day. If you guys are in California, I'd love to hear from you guys. If you guys are looking to buy or refinance, we could talk about what you guys would like to do and how we can help you guys out. We do offer quite a variety of loan programs and pricing and everything, so everything's pretty good. We could talk to see what we can do for you guys. Either direct message me or email is the best way to reach out to me. If you want the quickest response, email is probably the quickest response. I'll get that much quicker. All right, you guys have a great rest of the day. Thanks so much for watching. Catch you guys tomorrow. Bye-bye.